Yeah, we're live.
Says we're live. All right. I'm going to wait and see if the buffer kicks in here for the YouTube site. And it's live. There it is. Well, good morning, everyone. Good morning. With me today, by the way, I'm Jason Seibert. Some of you may know me, some of you may not. It's okay if you don't. It's all right. I'm a nobody compared to our guest today, Bruce Fenton. Superman, Batman, he's a superhero all in one. Bruce, welcome.
Thanks
for being here. We got into a little bit of a Twitter war this morning. A little bit.
Yeah. Well, I think it's a misunderstanding. I think that you'll agree if we understand. I think if you understood what I was trying to say, maybe I said it wrong, but I think if you understood what I was trying to say, that you would probably agree, because I think it's pretty. It's not some crazy legal thing. I don't think that I'm claiming, and I get where you're coming from, because there's so many misconceptions in this and so many scams, and you have a ton of knowledge about this. So. Yeah, and I don't even remember what it was that I had said. Oh, I know what it was. I said, okay, so it was a huge misconception. Many people think under U.S. securities laws, tokens are only available to accredited investors. No way securities are legal for anyone to buy. However, for anyone to buy a security, the issuer has to register as a publicly traded company. This consists of reporting and a lot of work. The work is such a burden that most issuers use an exemption, such as Reg D or Reg S or Reg A+. These rules allow issuers to sell certain people with certain limitations and makes them exempt from registration. Exemptions often the exemptions require people to be accredited, but just the fact that something's a security, typically the exemptions expire after a period of time, at which point a security can then trade more freely. So it's not accurate to assume tokens would only be available to accredited investors. This has potential to be so wide-reaching it changes how capital markets work. So that was it. But you disagreed with that.
So before we get started, you have 24 years in investing in the markets. Fill us in on your background a little bit.
27. Yeah. 27. When I was 19, I got my Series 7. I started my first job at Dean Witter when I was 14. My mom worked there, and so I was hanging out there when I was 7. I started working as a broker's assistant at age 14. At 19, I got my Series 7, became a broker, and worked there. And then I started my own firm, became a FINRA principal, was FINRA principal for 18 years. So total, and I'm a registered investment advisor now. So in total, I've been registered or governed by the SEC in some form or another for 27 years, 46.
Not that you're required to disclose, but any FINRA arbitrations,
nope,
any complaints that happened in that time?
Amazing thing. I've done over $5 billion in transactions, had probably 10,000 customers, and that ranges from people with $50 who were 401k participants up to one of the largest, wealthiest people, some of the wealthiest people in the world, and have never had a single complaint or single regulatory action or single fine or sanction or anything. Yeah,
well, that's impressive. Well, it's very hard for brokers to say that they've gone 27 plus years without having complaint filed against them. I think early on in my career, I had an older woman come to me. I think she was about 80 years old, and her Edward Jones advisor had basically put her into just some ridiculously inappropriate, imprudent, and risky stuff. And that wasn't really the awful part of it. The awful part of it was that the Edward Jones advisor was also the pastor of her church, and he was selling these securities from the pulpit, basically on Sundays, making claims that inappropriate claims, if you will, relating investments to God and holiness and things like that. So that's a kind of fraud that we call affinity fraud. I'm sure you're familiar with that, right?
Yeah. I've seen it all, and it's interesting. I've told people lately, I've been talking a lot about, because it's just recently as tokenization of securities became interesting, I sort of brought up this thing that my mom was a broker. A lot of people find that interesting. It is kind of funny. I wish I could find more pictures of me as a little kid hanging around the brokerage firm, but in those days it was really more of a Wild West. Those days as a little kid in the 70s and 80s, the Wall Street was more like the ICO market now. I mean, there was people getting, I mean, people got handcuffed at major firms like Morgan Stanley. My mom worked at Paine Webber, which is now known as UBS, Dean Witter, which actually acquired Morgan Stanley and took their name, and Merrill Lynch. And at all those firms, you would have people in the middle of the day, they'd get handcuffed, then
Right.
SEC would come in. I mean, it was really crazy. It was like the movie, Wall Street, which came out in like kind of at the peak of all that craziness. So it was really more like, maybe not like the ICO market is now, but maybe like it'll be if it gets worse, maybe how it'll be in a few years. So it was pretty crazy. So I've seen a lot of scams over the years, for sure.
Well, in the past couple of years that I've been doing this, I'll get phone calls, more often than not, from people saying that they've received some sort of regulatory letter. And the first question I'll ask them is, are you in handcuffs? And, more often than not, they say no. And I'll say, well, great, we still have a chance to try to figure this out.
Your second question is probably, who sent the letter? Is it
right,
the FBI, or is it the SEC, or is it the state attorney general in a state that they're not there?
State regulator, exactly. That's right. So depending upon who you're working with in this environment, things can be a little bit more dicey than others, which kind of brings me along the subject of affinity fraud, and kind of what triggered me to take a look at your tweets this morning and give pause at some of the things that you were saying. And from full disclosure, when I clerked in law school, I clerked at the Oregon Division of Finance and Corporate Securities, and I worked at both registration and enforcement desk. And so I would, on any given day, see notice filings, full filings, and I'd see complaints or work on investigations for various types of frauds for multiple attorneys in the office. And one of the hot button issues that we'll look at or that we did look at, were incomplete statements, or statements that have a tendency to promote something or hype something in a way that is misleading, or as I said, incomplete. And so what struck me was your conversation, or your statement that these offerings were going to be available to people, not just accredited investors. And to me, if I was sitting at the enforcement desk, that would have raised a red flag, and I would have started looking at you very seriously on what your intentions are, who you're working for, what kind of interest you have in it, what you're promoting, what you may be promoting in the background. I would have started an entire file on you about every other tweet that you've had, every other organization that you've been involved in. So this is something that
seems a little extreme. I'm predicting the future. That's what I've done my whole career. I've done that my whole career. I'm saying what I think is going to happen. I said that I thought the internet was going to be big. I said when I thought the market was going to crash. I said I actually predicted the 2008 crash in 2002. So I don't see what the problem is with me talking about what the future is going to be. I see a world. I mean, even if I said I think I see a world ultimately where you won't even have an SEC. But what I'm talking about in this is under current laws and under the laws that exist. I absolutely believe, I stand by that statement. I absolutely believe that non-accredited investors will be able to buy securities, and I'd be really curious why you don't believe that.
Oh, no. I believe it,
but you're acting like it's some kind of sensational statement, though, and you're implying that something's wrong by it's not.
It is incomplete, because right now non-accredited investors can buy securities.
Right, correct? Of course. Right.
They can do that.
And token securities will be under exactly the same rules.
And they don't need a blockchain for that, right?
That's a whole separate matter, but let's just talk about the legal part.
It's not a separate matter. See, when you're looking at promoting security sales on the blockchain versus not the blockchain, what you're talking about is trying to move markets from one facility to another. You're trying to move purchasers from one market to another. And to the extent that you have involvement with a market or somebody who wants to create that market for those securities, you have to look at your statements and what their intent is behind them, right? So that's where I'm looking at that, is why would Bruce start talking about how there's open markets that are available or could be available on a cryptocurrency or on a, blockchain-based securities market, where there's already all these markets that exist that are far more liquid, already regulated, have guarantees, have AML, KYC, all these things already in place. So that's the intent that we have to look at. Further, the other thing that we really didn't talk about or that you didn't address are all the other exemptions that are involved and all the other ways that non-accredited investors can acquire securities that don't have anything to do with the market. For example, we've got 504 exemptions, we've got mom and pop exemptions. We've got all these cryptocurrency companies that are out there right now trying to figure out how to raise money before they even have a business that's actually running. So what worries me is supporting the idea that cryptocurrency companies should, right from the beginning, be looking at what market they're going to go onto, instead of
who's supporting
thinking about how their business.
What makes you think I'm supporting that idea?
Well, by promoting a market or stating that a market will exist for these things to go on, you're trying to give someone an outlet of how they can put their ICOs on there, and we have to take a look.
Absolutely not. What gives you that idea? I'm talking about. Take the statement. Take what I actually have said. I've said that securities will be available to non-accredited investors,
and they already are.
Okay. Yeah, and so will tokenize securities. This tweet was done.
What's the difference? Let me ask you a question. What's the difference in your mind between a tokenized security and a regular security? What's the difference?
It would be when some portion of the terms of that security are reference an item, a digital entry on a blockchain.
Okay, why does that have to be on a blockchain?
It doesn't have to be on a blockchain. It could be on a piece of paper.
Absolutely. It could, right? And that's the way that it used to be done before we had wholesale clearinghouses and nobody was actually buying securities directly.
And then we got better technology called computers, and now we have what, in my opinion, is better technology called blockchain. Sounds like you might disagree that it's better technology, but
well, it all depends, right? I mean, a blockchain is only good as how decentralized it is and how fast it is, right? So, for example, let's take T0. Full disclosure, you advise T0?
I'm a board member.
You're a board member, got it. And full disclosure, even though I've never represented T0, I have talked with some of its representatives, never in a representative capacity, but we did talk about certain functions within there and how, securities law may intersect, but never in an official attorney-client capacity. And I'm not going to talk about anything that's privileged. So when you look at T0's function, right? T0 is trying to set up a market for same-day trades, right? For securities to be able to trade back and forth using cryptocurrency technology, using blockchain. So is T0 using a database or a blockchain?
No, they would be on a blockchain. It wouldn't be on a database.
And is that blockchain out and running?
Well, it depends. No, it depends who issues securities. People can issue securities on the Bitcoin blockchain, on Ethereum Classic, ADA, EOS. No,
I'm talking about T0.
Right. T0 will trade securities based on whatever blockchain they trade on.
Oh, no. Let me be more pedantic than that. T0's infrastructure back of the house.
Right.
Is it a database or a blockchain?
It's neither. I mean, I don't want to get too into specific with T0, but the way that all of these exchanges and what I think Coinbase and Circle are clearly going down this path, and probably many, many others, both coming from the regulated side trying to become more crypto, or coming from the crypto side trying to become more regulated in the case of Coinbase and Circle. I think that I think the very clear model is that you will have securities that trade exactly like tokens trade now. So they could be ERC20 tokens or whatever, and they'll trade them, and the exchange won't need its own internal blockchain.
So the exchange itself is still going to be a database, right?
And I don't think it'd be really a database.
Well, how else does the exchange keep track of its client records, AML, KYC, exchange rates, account numbers, what trades are being functioned? How are we doing that?
Have a database that has your customers in it and all of that kind of stuff. Every broker has that. But that's separate. The database that has your customer information and your compliance information, your client agreements and everything, that's a separate database. There is no database for the trading. The securities come in whatever form they're in. Could be a piece of paper, a certificate, a digital share through DTCC, or it could be a securities token on an ERC20 token or a counterparty token. And the securities come in and that is independent. There's not some additional blockchain that is like a master blockchain or something. I know that there's some firms that have looked at that model. I think maybe that's what R3 was looking at. But I don't think that that's where the industry will go. I think that it will be more like Kraken with a securities license.
Okay, so let's just back this up for a second. Let's say T0 was live right now and it had active trading on it. Okay. And I wanted to put in an order for 50 storage, assuming that storage was a fully registered crypto security, which I don't think it is, but let's say that it is. So now storage is a ticker on T0. Right. I've got a T0 account.
I don't like
the
whole way you're going down. It's just misconceptions on top of misconceptions, and you're
educate us.
But you're using hypotheticals for the things that T0 wouldn't even do, and that makes me particularly uncomfortable because I don't really want to discuss T0. I can discuss the industry in general. I could tell you what I think exchanges in general, like T0 and like Coinbase and like Circle, will do, and I can tell you where I think the industry is going to go. But I'm not going to address hypotheticals about things that T0 are going to do. It'd be like me it'd be like if I said, hey Stephen, in your internship program in Panama, when you beat people, if you wanted to beat people when they came in for misbehavior, how would you beat them, with a stick or a pipe? It's just an absurd question because you're kind of asking things that don't really apply, and you're making these assumptions which I'm not sure where you got them, that there's some kind of internal database or something. So ideally, so why don't we just talk about where the industry will look in a couple of years?
Here's where it matters, right? Because when we're selling the idea that blockchain-based securities are better, or they're somehow an alternative to the traditional market,
right?
First of all, why do we use a blockchain?
Well,
why do you think people use blockchain? Let's
are
break
better.
This down.
And if your concern is that the SEC or anybody else is going to think that I'm selling snake oil because
no. Let's back this up. Why do we use a blockchain?
A blockchain is very good for eliminating trusted third parties, eliminating the need for trusted third parties. Right.
It's all about trust.
Right.
Okay. If I hear somebody talk about the Byzantine general problem one more time, I'm going to shoot them in the face with a shotgun. I'm tired of hearing it, but at the same time, that's why people talk about the blockchain, right? Trust. So if I'm an issuer and I'm issuing my own securities, like Overstock issued their securities, they got approval to issue securities on the blockchain. So what was the point of that, right? One, it was neat, but two, there's really no need to do that, right? Okay. Other than it was the novelty of it. So from a trust standpoint, the only reason I want a blockchain-based security is that I know that every place that goes, I'm going to be able to track it, trace it, and be able to see all of my auditing real time. So if I'm creating a blockchain security, a blockchain-based security where I'm issuing it on a chain, and I'm going to put it into some database somewhere, and it's somehow mysteriously trade hands internally.
It's not in a database. The blockchain
it's going to go on an exchange. It goes on an exchange, okay? And that exchange has nothing to do with the blockchain. It's just a database at that point, right? So at that point, it's trading hands there, and then somehow it ends up getting to another place. You're obviating the need for a blockchain-based security when that issued device goes into a non-blockchain entity.
No, I disagree.
Right? There's no point. There's no point to it.
I disagree with that. And I think a lot of and you see Coinbase disagrees, Circle disagrees as well.
Well, of course they disagree, right? Because Coinbase can take all the transaction fees, they can handle all the accounts, they can see what's going on, they can completely control the environment that's inside of it, and it's easier for them to manage. And 99% of the time, a database is far superior than a blockchain in speed, management, control,
not in this case.
Right? So in this case, you're talking about a specific use case of why it is better for me as company ABC to say, you know what, I'm not going to do direct issuance. I'm not going to do a private placement memorandum. I'm going to issue pieces of paper or debenture or notes or whatever I'm going to do on my own directly to the customer. But instead of doing that, I'm going to go pull up an ERC20 token, or I'm going to pull up a counterparty asset. And out of thin air, I'm going to make, 20 million tokens, and I'm going to sell those on the blockchain. But right now, I have no market to do that.
Well,
There aren't
I mean,
any single exchanges.
You're blending two different things. You're assuming that by being a token that they're
versus the
worse.
market, right? So it's not a matter of being worse. It's about the reality of the scenario. And yes, it's chicken or the egg. But what I want to hear your argument for is why a blockchain issued security is superior to the way we do it today.
Because it allows people to own and control their own wealth. If you own stocks now, you don't actually own those stocks.
Oh, come on. That's a construct. I don't have to own the stock to own the right to receive the funds to it. That's just a construct.
Well,
right? That's all contract.
I think it's better if you own your own stocks. You could control them. You could put them in your own wallet. You can trade them how you want. You can trade them and keep custody of them. You don't have to rely on another trusted party to say what the ledger is. You can rely on a blockchain to say what the ledger is.
Okay,
and I think that opens up ability.
For 27 years. For 27 years, you sold securities without a blockchain, right? And you were able to do that without getting a single complaint filed against you because you were a trusted fiduciary and you handled your client's stuff well, right? So the trust issue is what we have there. Now, let's move that over into a blockchain-based security. How do we change that trust component to where now you have individual people that are out there going, well, shit, I'm just going to buy storage today because it's available and it's out in an open market. Hasn't been vetted by an investment advisor. There's been no verification of trust.
You're blending.
No, it's all about market.
Either someone has an advisor, like my job that I had for many years, or they don't. And I mean, so you seem to think that everything changes, and like the example that you just gave when you said somebody could just issue 20 million tokens. Well, they could just issue 20 million pieces of paper too. They could issue a trillion pieces of paper. You're implying that it's somehow worse if it's a security token. Or I get that you don't get
that it doesn't make it any better. You're making the argument that a security issued on
it does make it better because it makes it better because who manages the ledger now for Apple, let's say.
So you're talking about the investor relations division and the entire team of Apple attorneys and all of their vendor relations.
Do you think that Apple's investor relations division manages the ledger now?
So when you're talking about who owns Apple stock, as you know, and as I know, you have multiple institutional banks or holding houses that actually buy up all of that, and they basically assign their rights to people inside. So nobody actually ever directly buys from Apple, right?
Right. But where's if you have 100 shares of Apple, if I have 100 shares of Apple, where is that ledger? Where does it say that I have that? Where does that ledger exist? How is it managed? I
understand where you're going. That's all on databases, right? And that it has to be audited. However, to the average investor, hell, to me, when I bought Ford stock when it was 95 cents back in 2008, it's where I got it from. All I cared is that I bought it. And then when it hit $7, I sold it and I got my money. Right?
Right.
By the way, full disclosure, that's how I started my law office in 2009, was off of Ford stock. Thank you, Ford. Love you. So the point is, I didn't need a blockchain for that. All I needed to know is that my counterparty.
Right. And when my mom sold stocks, we didn't need computers. We just needed paper. What's wrong with the ticker tape? We could go back to a ticker tape. Listen, this is better technology because it enables you to do things that you couldn't do. Well, I'm trying to explain it to you. First, you have to understand who manages the ledger and who actually has that. And I don't think you really realize how the ledger is managed. I'm looking to replace a specific ledger. So the way it works now is you have your Apple stock. You started to mention that the issuer and the shareholder relations manager, they don't have anything to do with it. Apple doesn't know who their shareholders are. They do not have a ledger. They can't even get a copy of the ledger. They have to hire consultants to pay them $40,000 just to send a piece of paper to people to do shareholder and proxy statements and things like that. They don't even know how, because once they did their IPO, they went out into the wild public markets. And those public markets, there's 300, and I know you hate the Byzantine generals problem, but it is a matter of parties who do not trust each other. If you have your 100 shares of Apple at Merrill Lynch will have a database in-house that says that you own that. But who knows the master list of who really owns it? How do they know that that's really good? How do they know that Merrill Lynch, how does Goldman Sachs Merrill is not going to share their ledger with Goldman, and Goldman isn't going to share their ledger with Merrill. So how does Goldman know that Merrill isn't just making that up, that you don't really have the 100 shares? You can't rely on Merrill's database, you can't rely on Goldman's, and neither party will share it, and they don't trust each other. And they don't even trust the issuer because of activist shareholders and things like that. So none of these parties trust each other. So what they did is they created an additional party called DTCC, and they put everybody's name in one company, CD & Co. And because of that, there's a lot of inefficiency. You have these 350 parties. They have to communicate through FTP and all of this nonsense. And a lot of people say, oh, just upgrade the tech. It's not simple to upgrade the tech. Wall Street spends billions of dollars on this. The problem is that you need a trusted third party, and trusted third parties are inefficient in this particular case. You have to have a whole bunch of competing parties who don't trust each other, have to trust these centralized parties, DTCC and CD & Co. And all CD & Co. and DTC do is run a ledger that sort of says who owns what. And you'd be interested to look at the legal cases on this. There's arguments that people don't even own their shares. There's the Dole case where, extra shares were just generated. There's all kinds of problems with this system. And one super easy, tangible example of why this would be better for you or a customer is that right now, if you want to take your shares from your Apple shares from Morgan Stanley, you can't get them. You can't take custody of them. You can't get a certificate. And even to transfer them to another broker takes a minimum of 5 days. With a blockchain token, it could be instant. You could take it into your own custody in your own paper wallet. You don't have to trust a broker. You could go from Goldman Sachs to Merrill Lynch in 10 minutes or 6 confirms or whatever they require. So that's an advantage.
All you're talking about there is the function of trading within the exchange, period. You're talking about improving the function within the exchange of how they get traded back and forth. That has nothing to do, period, zero, zip, zilch, nothing to do with actually issuing that security on a blockchain. I could start a blockchain company today, ABC blockchain company, right? And I could launch my blockchain. And there could only be one mining device, only one node, but it's on a blockchain, and I've issued my securities on a blockchain, right? But we haven't solved the trust issue. Right. Everything
it needs to be a solid and secure blockchain. I mean, that goes without saying.
Right. It does. So my point is, all of those advantages that you're talking about don't work unless the exchange itself runs on a blockchain, and then you eliminate all the trust issues.
No, the exchange doesn't need to run on a blockchain. The securities ledger, the ledger for the securities is on a blockchain.
Okay, are you going to mandate in this utopian world? Are you going to mandate that those blockchains be proof of work blockchains?
Who would mandate that? I'm not in favor of regulations.
I don't know.
I'm not in favor of regulations that would mandate any such thing. But certainly, if I was issuing securities, which I intend to do, or I am looking at securities, I'm going to look very, very carefully at the blockchain. I talk about this all the time. Of course, the security, the blockchain is absolutely paramount above all else, above the project, above everything else. Because if your blockchain is insecure, you run the risk of losing 100% of the assets or having all kinds of problems that happen. So absolutely, the blockchain has to be secure. But I wouldn't be in favor of a legislation mandating that. I mean, we don't want,
I'm not talking about legislation. I'm talking about the exchange itself. Is T0 going to have certain minimum requirements for the number of nodes running on a chain for it to be listed on T0's exchange?
Again, I don't want to get into specifics about that company, but I think that any sensible exchange is clearly going to have criteria that they look for about who they would accept. Absolutely. Yeah.
Right. So over the last year, well, don't quote me on the full 12-month time frame. I've been in Panama for about 4 months, and so time works differently here. My apologies. So I've received multiple phone calls and multiple requests from potential clients and some clients that are looking to have their token analyzed and attested to not being a security so they can continue to be listed on exchanges like Poloniex, Kraken, etc. Right. Because right now, in this cryptocurrency tokenomics that we have, and the reality of the world that we have, being a security is a bad thing. And the reason it's a bad thing is that if you're a security, you don't get listed, you don't have liquidity, you don't have the opportunity to be traded back and forth on a daily basis and 10x PAMP or 100x PAMP on one day, right? So what I want to talk about now is moving forward is the reality of how the markets work today versus how the markets you see them working tomorrow, right? And if you're advocating that a company go fully public, right, do a general offering, and out of that be able to generically solicit, including all of the filings, all the quarterly reports, full financials, auditing, et cetera, to do that. And now they can launch, right? Which actually wouldn't be that tough, right? Let's say IBM decides, you know what, we're just going to wipe everything out and we're going to move to blockchain issued securities. It's not a big deal. It's just a modification notice addendum to their filing, and then they get approval, right? We agree on that?
Yeah.
As opposed to a startup, right?
Right.
Startup going through that.
Yeah,
process.
just to clear up one thing, you seem to have some kind of impression that I'm talking about scammy ICOs or you know, startups and 100Xs or something like that. I've never talked about those things. I've never asked for a single penny in this industry. I've never raised any money. I've never been part of any ICO. I've never promoted an ICO. I've never even bought an ICO. So please don't lump me into some category of like, oh, Bruce is just trying to securitize things so that.
You have Ethereum? Do you have Ethereum?
Yeah, Ethereum, you're right. You're right. You're right. Sorry, I made the same mistake. I made the same mistake of, and I have owned things after the after ICO, like ADA. So yeah, you're right. Same mistake that Ethereum or Coinbase's general counsel, I think, made that same mistake in the congressional testimony. They said Coinbase doesn't list ICOs. You're right. You're right. Ethereum is an ICO, but I generally talk about ICOs as kind of this latest generation of the most recent generation. But that's not my thing. So I don't want to give you the impression that I'm trying to use. I've been focused on the securities token thing since long before the ICO craze, and I think of it as serious stuff. The world that I came in, I think of it as the Apples and the Overstocks of the world doing this. I don't really care about scammy ICOs, although I support startups, and it would be better if for most of these ICOs, if instead of trying to have these scammy, phony metrics to pretend that they're a utility and not really a security, I think it would actually be a little bit better if they were a security, because then at least the investors would have some hope, if this crazy scam works, of getting something back. I mean, right now, the crazy thing is 99 out of 100 of these will fail. And the one that makes it, the investors still won't get it back, because if they make it, doesn't mean that the thing will actually have utility. They might just go and, invest in something else. I hear about these ICOs, they're buying headquarter buildings and who knows what. And so even the 1 in 100 that may make it, the metrics don't necessarily get back to the investor. But at least if they said, hey, this is flat out equity, you get 10% of the company and 10% of our whatever, gross revenue or whatever smart contract, at least if it was a security, then they'd have some chance of doing it in this highly speculative market. But that's not my thing. I'm more interested in the big picture, trillions of dollars in the big capital markets and big serious things
that's
becoming
where you come
tokenized.
From. $5 billion put under management or into some form of portfolio, right?
Yeah, well, I've done that many transactions. I mean, I didn't manage that money. That's how much money I've basically raised and put into investments, pretty much.
Right. So the audience that we have, or that's going to watch this, is not the institutional investor. It's going to be the guy sitting or the gal sitting at her desk, and they've got a couple $1,000s to put into something, and they have to make a choice, right? And my little pea brain says they don't give a rat's ass whether it's a security or it's not a security. They just want to know what's going to happen today, and can they get 8% today in their day trade, right? The institutional investor is a different type of investor.
Yeah.
And they're a different type of class. And it being a registered security or not will matter to them, right? Because somehow that gives some form of bona fides to the venture. So what I see and what I've seen, and maybe I've seen 1 or 2 white papers, I'm sure you have too, are these fly-by-night companies that pop up and say, great, we've got the next great solution to AI, and all we need is $70 million in our ICO, which is launching tomorrow, and we're going to change the world. And there's absolutely no management experience, there's no coding experience. It's just somebody that says, I'm going to try to take advantage of the ICO craze. And you and I would both agree that there's a level of fraud to that.
For sure. So,
but what you have in this crazy crypto Wild West that we have is those companies actually raising that money.
Right.
And they include these terrible little terms and conditions that say, if we get bored, we can abandon the project, right? If the market doesn't accept our terms, we can abandon the project. Look, that still passes muster under disclosure rules with the SEC.
Right.
Just having a registered security doesn't eliminate the scams.
For
right?
sure.
It just means
I
somebody
tweeted
went
that
into
just
this.
the other day. I said, let me see if I have it here. I said, something about how, as much as I believe in this, most of these securities tokens will be scams. Absolutely. They're going to every scammy ICO that wanted to do utility token is now looking at this, particularly in the light of Coinbase's announcement and the latest hype about it. They're all looking at this and saying, okay, how can I be a security? And I've said many times, I've made a whole bunch of tweets, you can look at it, where I've said just the fact that something is a security doesn't make it any less likely to be scammy. And most of these things will be scammy, especially at first, especially for the first couple of years, because it is the Wild West and it's a new market, and you're not going to have Apple do it on day one. You're going to have a lot of much more risky companies.
So let's take a look at and we talked about this. For those that don't know, I'm running an internship right now here in Panama. We've got actually right now 7 international law students in Panama that are learning about cryptocurrency and the law. And I just had surgery the other day, and so I'm not in class right now. I'm laid up with a cane. So hopefully they're tuned in right now and listening. But if they were here, they would tell you about how business 100 years ago was about building a business first. And once you built your business and you proved yourself, then you move forward. And if you didn't have the resources on your own through local investment or your own money or family and friends, or through retail sales and revenue, you may take a risk in getting a loan from a bank, and that would be the next step. You get a loan from a bank to advance your business. And if that wasn't enough, you might consider publicly trading your stock, doing an initial public offering, right? Doing a stock issuance. And at that point, you're at the top level of your business growth, and you need to go further. Today, there's a perfect example of a company that is wildly successful that has never gone public, and that's Bechtel. Do you know who Bechtel is?
Sure.
Right? So I look at successful companies and I look at successful business models and I go, well, wait, there's plenty of models of businesses that have never even gone public because they've been able to do good business. But in today's ICO world, what does our community see? They see that the path to success is get all the money first before you've ever done anything, and then maybe produce something. Right. So how do you think we got there, and how can we get away from that? How can we go actually back to building business again?
Yeah,
so business 101 in the crypto world by Bruce Fenton.
I agree with that 100%, and I've said a lot of things that are along the same lines. Which is why I haven't bought these ICOs typically. The way we get out of it is by having free markets that allow trading. If people are allowed to invest in things, I think that's a good thing. I'd actually be in favor of reducing the laws, but like I said, I've been governed by them for a long time, and so and I said, you'll appreciate yesterday, I said, these aren't really optional laws. It's like you either have a choice of completely complying or you kind of go to jail. It's like being an activist. There isn't really an in-between road where it's like drug laws in many states. You can be an activist, but you're still going to be punished, and it's very serious. So certainly following these laws is something that's not optional, at least for anybody that I think is reasonable. But I'd be in favor of reducing them. But even within the existing laws, the more that this happens, I think the markets even that out. I think there's a lot of stupid things that people did 6 months ago, they're less likely to do now. People are going to, once you have deal after deal where they say, gee, my cousin only makes 40 grand a year, and he put his life savings of 20 grand in this ICO thing because a celebrity tweeted about it, and he lost all his money, and now his partner's mad at him or something. Then I think people learn, and so I'm in favor of letting people trade and make mistakes and do stupid things. And I think that in the Wild West, there was certainly a lot of scams. There's a lot of scams in this space. I think probably 95% of the ICOs that raised money in this latest generation are either outright scams or certainly negligence to the point of being scams. But I think and I think here's the tweet. It said, just to be clear, securities token will be a great revolution in capital markets, but early security tokens will likely be scams. Fast growing sectors attract opportunists who attract bad actors. As this matures, more higher quality issues will issue securities tokens. So I'm very aware of that. And being a cheerleader for securities tokens, I'm a little bit cringing in advance because a year or two from now, when I'm right and there's this $1 trillion in securities tokens, a whole bunch of them are going to be junk and scams, and I'm going to be associated with that, and that's unfortunate. But I do believe in the long term of the market because of the reasons that I mentioned. I think that this technology makes sense, and the liquidity will help the markets overall.
So what's wrong with telling the cryptocurrency world, look, a 504 offering is perfectly fine, and you should go that route?
Well, you certainly can, and you can do that as a token or not a token, depending on your preference. There's nothing wrong.
Right, and what's the benefit of a 504 exemption?
Well, it's what is it, $5 million, but you have to be accredited investors.
No, you don't.
It's under Reg D. You don't. Okay, so it's the new part. So it's the new part. You're kind of quizzing me on securities. I'm sure your interns would know, but it's part of Reg D, and it came out fairly recently and has $5 million exemption, right?
2017, yeah. Okay. So what they did is they modified the original 1 million.
What do I get as a non-lawyer? Do I get a C plus?
No. Well, you would have failed. But that's okay.
No, I knew that. I knew that it was. I knew that it was part of Reg D, and I knew that it was 5 million. I said accredited when it wasn't. So that's.
So the only difference here is that first of all, with it used to be under the 1 million exemption that you could actually be a bad actor and still have exemptions, which is crazy. But one thing everybody needs to know is, regardless of what you do, there are no exemptions for fraud, right?
Right.
So what that means is you rely on an exemption, say a Reg D or 506C, where you get to have general solicitation. You just have to do a little bit more steps and assurances that the people that are buying them are accredited investors, right? But say you implement a little bit of fraud when you're doing that. What the SEC will do is yank that exemption, and then they will come after you not only for the fraud, but for unlicensed, unregistered securities, because they pull that exemption away from you. So that's what I mean when I say there is no exemption for fraud.
Right.
Now, with the 504 5 million cap, the thing that's interesting about that is that you don't have to file with the SEC any of your disclosure documents. You don't have to go through that process, but you do have to do a notice filing to your state. So if I was somebody like a Storage just starting off, I could raise money locally, only file in Georgia, raise $5 million every rolling 12 years, and not have to worry about all of this stuff. And they're unlimited, they're unrestricted, and they're
12
great.
Years is 12 months.
Oh, I'm sorry.
you get A minus
in every 12 months.
Every 12 months. Yeah, no, I agree. It's a great offering. I mean, there's a lot of cool offerings under the Jobs Act. I mean, the 1,070,000 or 50,000, whatever it is, under the Jobs Act, and the bigger Jobs Act.
But the problem with the Jobs Act is that you're locked up, right? If I'm a non-accredited investor, I can buy in the Jobs Act, but I can only sell to a accredited investor.
Right.
So if I'm a non-accredited investor, or I'm trying to sell to non-accredited investors, and I'm perfectly fine with, 5 million a year, I don't have to go any of these routes.
Right.
And the problem is there's nobody that's talking about that stuff, right? There's nobody that's out there promoting that publicly. And the point of that is that nobody wants to settle for just 5 million, right? No, they want the 70 million, or they want the 230 million that Tezos made. Right. In 24 hours, 230 million. Why would I only settle for 5 when I could get 230 from, the greater fool argument?
Right.
So what worries me is when you make generalized, kind of incomplete statements that you did this morning, which I think you can see why I got into it a little bit semantically because of the options that are there. And I can tell from our conversation, we're on the same side. We want a good market. We want a legitimate market. We want people to participate. We can agree on that. What I would like to see is full knowledge and full disclosure of these options. And the one thing I still haven't heard from you, and I want you to tell me, why is a security on the blockchain better?
Well, it's the reason I said it. The way that it
No, no, no,
trades.
no, 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 no. You already said it.
But that is better. That's a big difference.
No,
Being able to control
not.
your own wealth, I think, is a big. I prefer, if I have a choice, if I could have, if Apple comes out and would say we have class X shares and X shares are represented by a token, I'm going to be all over those. I prefer to control my own wealth on my own phone or my own private keys. I may be crazy. I'm in the minority now, but I think it's a cool thing. And I think being able to send you stock right now, I did a thing called ACATs for a bunch of my career. ACAT is this system run through DTCC.
So you're wanting to do peer-to-peer stock exchange?
Yeah, yeah. I mean, I want to have stocks have the ability for people to control them themselves, for people to be able to
just because I can already do that right now with my TD Ameritrade account that's on my phone. I control my own stocks from my phone.
Well, no, because TD Ameritrade has you can't get out of their ledger unless you go to some other broker's ledger. You can't take your shares. You can't take a bearer asset.
But functionally speaking, to me, why do I care?
You probably don't, but most people don't.
To 99% of the investors out there, why do they care? They don't. All they care about is, I've got a little entry in my account that says I have 1,000 shares of Ford stock. I want to sell it today. The order gets placed, the money goes into my account, and it's done.
They'll care when they go to transfer it, because right now it takes a minimum of 5 days, and an hour is better than 5 days.
That's an exchange function,
right? But it can
that's
only
not a securities core function.
It is, though, because in the way that the securities trade in the capital markets, it requires this big conglomerate that we have in the DTCC system. So it takes 5 days, and with a blockchain security, it won't take 5 days. So that'll be a tangible benefit that people will see. You'll be able to move your tokens around just like you can move your Ethereum around. You go from Coinbase to Kraken to Goldman Sachs to whoever. I think that's huge.
So you think that it's required for the security to be issued on a blockchain initially to be able to do that function?
In the way that I described, yeah, because otherwise...
And I think you're wrong.
But, okay, how would you solve it then? You'd need to rely on another trusted third party.
No. The exchange itself would be a T0 type exchange, meaning that it'll clear trades on that day.
So how,
so that's just a faster database.
How do you get your Apple from Coinbase to Kraken to Goldman Sachs? How do you do that without a blockchain or a trusted third party? Those are the only two ways I know.
Okay, so your assumption that a blockchain is required is what I'm digging into.
Right, and what I'm saying is that it is required unless you have a trusted third party.
There's two parts of this argument, okay? It's either A, the issuance itself, the share itself, is a cryptographic asset, right?
Mm-hmm.
Or the asset, which has been tokenized, is traded on a blockchain-based exchange.
Right. Well, you could also do it after. I mean, an existing publicly traded company could do it, or a private company could do it. Anybody can issue a token. You can just have a board resolution. You say we're either issuing new stock or designating this stock, or if you own this token, it represents this stock. You know how it is. Any sort of contract anybody could come up with.
So what's wrong with? Let's say I'm just gonna. I know you don't like hypotheticals, but I'm going to throw out a technical solution here. All right. Let's say that TD Ameritrade says, you know what we're going to do? We're going to clear everything and hash it and record it in the blockchain. And on the fourth confirmation of that hash, we're going to release funds same day. They're hashing their own database. They're verifying the trust issue. They're clearing through publicly auditing their own financials.
Okay. Yeah, that wouldn't be very useful, I don't think. I mean, that's not going to.
Oh, okay. Well, let's get Factom out the door then. We don't need Factom, right?
Well, I mean, that's not Factom's only use case. I mean, there is going to be uses of hashing data on a database, but that's completely different.
I'm not trying to troll Factom here. I'm just saying
but they're not trying to solve this particular problem. I mean, you're talking about how can we. How can you move securities from one broker to another? The ways that I know are either through a trusted third party like DTCC or through a blockchain. It's the only two ways that I know how to do it. That's what I'm talking about. Factom does write data to a database, but that's a different use case. To move securities from, and it's really, really complex unless somebody came from, even brokers don't understand this, unless you come from the ops side. It's not a theoretical market. It's a huge market that's very, very complex. There's all these parties and ways that it interacts and all these reporting, and there's tape to tape transfers and data being given back and forth on FTP. And the people who really understand that market now know that it's got a lot of drawbacks and a lot of delays. That's why it takes days. This ACAT process that I mentioned, if you want to go from Merrill Lynch to Morgan Stanley, it can take up to 10 days. And if you have any mistake in your spelling of your name, or you changed your address, or you're Amish and you don't have an ID, or you end up on some watch list, or any number, or somebody died, or it's a trust, or any number of 100 other things, it could take 10 weeks. And the one simple thing that will be tangible and noticeable to people is if they have this on the database has got to be somewhere. It can't be at Ameritrade, and it can't be at Morgan Stanley, because they don't trust each other right now. Nobody cares what Ameritrade publishes because the other firms don't trust Ameritrade. And so
I accept your apology, by the way. You just made my argument for making the exchanges be blockchain based.
No, because nobody would trust the exchanges either. Ameritrade would be an exchange.
What do you mean? If you had the exchanges,
the users trust the exchange, but the other exchanges don't trust the exchange. The other exchanges don't trust the exchange because they're competitors, so they don't share their database. It's very, very complex. I did a couple videos on this. You have all of these parties who don't trust each other doing millions and millions and millions of trades a day. And
so why do you have a blockchain?
A blockchain, so that the blockchain does the ledger. The blockchain is the ledger. And you don't need to trust anybody. Morgan Stanley doesn't need to trust Merrill Lynch. They just need to look at the blockchain and say, yeah, this address has this many coins in it, or this many tokens in it, or this many shares in it. And then they'll be able to look at right now, for them to know that a trade is good, they have to go through DTCC and they have to say, okay, Merrill Lynch says that they're selling this. Do they really have it? And they've got to go through this database. And then when they, and that's just to find out if the trade's good. And then to settle it, it takes a long time to move all these securities back and forth. With the blockchain, they could trade it the same way Kraken knows that. How does Kraken know your EOS is any good? If you send EOS and you sell it within an hour and you get US dollars, how does Kraken know that that's any good? How does Kraken know your ETH is any good? If I send my Bitcoin to Kraken and I sell it for $1 million, they're going to send me $1 million check. They know that's good Bitcoin. Why? Because the ledger is on a blockchain. It's public. They don't need to coordinate with Coinbase. They don't need to share a ledger. They don't need to print it or hash it or have their own blockchain or anything else. They just need to look at a blockchain. And the only difference with this is that you're having the outside world attribute human contract language, investment contract, whatever, to a digital asset, which is what, basically security wouldn't. I mean, you would agree that under the 33 Act, I'm sure you teach this, that it's super, super comprehensive. I mean, it's like, I can't even remember it by heart. It's like debt, debenture, bond, anything. It's totally covered. And I think there's been Supreme Court cases which have specifically said it is designed to be interpreted as very, very broad. So it's a broad thing. I would say if you were going to summarize it in one word, it might just be like agreements, basically agreements that are, and then if you expanded on that, something like a security is an agreement that is an investment contract between parties. And then, if you have the space, you could do the whole definition that includes all these other things. But at its root, I think, I'd be curious to your thoughts, but I think that, a one-word synonym of security might be something along the lines of agreement, if you could do that. And those agreements can reference a blockchain and therefore, or a digital asset, and therefore say, yeah, this represents this. So it would work. So it would trade exactly like these scammy ICO tokens trade, some on good blockchain, some on bad ones, but the difference is that the terms will be different. So instead of getting a pile of flowers and a fantasy that maybe someday this thing will have utility and people will use it as cash, you get actual legal rights that hopefully are just as good as a piece of paper that say you are entitled to X as the holder of this security.
So let's take a look at the problem that you're trying to solve, right? And if I can identify the problem you're trying to solve. I don't see you trying to solve the way that an issuer raises money. I don't see you trying to solve a way that the world can be on notice of who holds those things. You're trying to solve the problem from the day trading, micro trader, bot trader standpoint of how quickly they can move assets in and out of various exchanges.
No, because actually,
all of these things we do already. All of these things we do very well. We have trust, we have verification, people can issue things, right? The T0 component is I trade a stock, I'm able to trade that fiat, or I'm able to trade whatever cryptocurrency I get into and out of at a second's notice and not be delayed by having to go through some verification process that this thing cleared, right?
So what we're trying to solve is because all those high frequency trading things are going to be done off chain anyway. Those aren't going to be on chain transactions. Blockchains are, Bitcoin, as you know, is 7 transactions a second. That kind of volume is going to be very difficult. Even with Lightning Network, it wouldn't make sense. Those ledgers are kept in house by brokers and sort of batched out at the end of the day, and that's some if there's ever a huge volume like that in crypto, then that would probably, at least for the foreseeable future, follow some kind of similar lines of that.
So what are you solving then? I mean,
so it's how you move. It's how you actually custody the securities, and who has the ledger, and who controls it, and who actually controls the securities, and giving that power over the owners of those securities, so they can right now.
The node doesn't control that. The nodes control that.
Well, no, if you have a token
node and I control 51% of them, I can give whatever tokens I want to anybody I want. Right? Just because it's on my phone doesn't mean it's immutable. Right.
Well, it depends on the blockchain. I mean, that's a whole different thing.
Exactly. Right. I mean, so one of the things that I heard, and I want to say it back to you, and you tell me if I got it right, is one of the things that you value is being able to issue something and be able to get verification right then and there if I'm an exchange that person actually has that asset. So I go to Kraken, and I say I've got 50 Ethereum. I want to pull them into the Kraken network, and I want to trade them for shitcoin ABC, right? And so I load the Ethereum into my account. Now I have that. I can then post, get shitcoin ABC. Life's good. Life's done, right? But what it doesn't do is the allocation of shitcoin ABC into my own local account doesn't actually give me control of that shitcoin ABC, right? Because in order for me to have control of that, it's still sitting on the Kraken database. I have to go get a shitcoin ABC wallet,
right,
in order to bring that down to myself. So the problem you're trying to solve isn't necessarily something from an exchange function or a trading function. You're talking about time to clear assets from an exchange point of view of when I load whatever asset I have into that exchange, that it can be immediately available.
Well, it's not time.
Why is that a benefit? Why is that a benefit for the exchange, right? Well, I can generate more exchange fees. I can exchange more trading fees. I can make more things available the faster I've got it available. And from a day trader standpoint, great. I've got a market that's pumping on shitcoin ABC, and I have to wait 4 or 5 days to be able to get control of that and invest in that.
It's not really what it's solving for. No, it's not about day traders. It's about individuals controlling their own money, retirees and people who have stocks.
You keep coming back to that, and people can already control their own money just fine.
They can't. I've done thousands and thousands of transfers between brokerage firms, and they don't control their own money. It takes days to control their money. You try your firm and say, call up Merrill Lynch.
You just don't like the timeline.
Right, because we have to, it's not about solving just the timeline. It's about eliminating a trusted third party. Right now, we need this other trusted third party to do it. And I don't,
okay, hold on.
I'd rather have a blockchain be the trusted third party.
We had an exchange that was a trusted third party that was in the cryptocurrency world. And people loaded their cryptocurrency into it. They traded with it. They loaded it out. And that was Cryptsy. Was that a trusted third party? Did Big Vern screw everybody over?
Yeah, I what I'm saying is I want to eliminate trusted third parties. Yeah.
No, but you can't.
Well, you can eliminate DTCC, and that's a big one.
No, you don't. You're just replacing DTCC with T0.
No, we're not. We're replacing it with a blockchain. We're replacing it with
T0 is a blockchain.
No, it's not. It's nothing. Forget T0. It's replacing DTCC is a ledger. Okay, yeah, brokers interact with that ledger. We're going to replace that ledger with a different ledger. That ledger will be the various blockchains that are used. Brokers still serve the same function.
So you're going to replace one centralized clearinghouse that's trusted for clearing,
right,
with 2,000 individual blockchains that may or may not have a trustworthy architecture or sufficient nodes within them.
Right. Exactly.
Okay. All right.
I mean,
we have consensus.
But here's the thing to remember. In reality, the clearing that DTCC does is very significant, $10 trillion or so. Or I shouldn't say the clearing, but the ledger that they run counts for $10 trillion. Now, realistically, that $10 trillion isn't going to spread out among these 2,000 blockchains. And that's really up to the issuers. I mean, if Apple wants to put their stock on, you know, Jane's blockchain or Fred's blockchain, that's their business. It's extremely unlikely that's going to happen. These companies aren't just going to switch over to DTCC. What you're going to see is as major blockchains like Bitcoin get really secure, and I think Bitcoin is at a level now where you could say that you are very unlikely to have it be hacked or 51% attacked successfully. I think it's a robust and strong network. So I think now at this late stage of Bitcoin, and as other blockchains, if they ever do, some say none will, but whatever the case, whether it's one blockchain or 10 or 20, when they reach a sufficient point of security, an issuer can choose to use that chain. Now, if it's Apple, and I was advising Tim Cook, I would say, oof, hold on, even the Bitcoin chain might be a little bit scary for something as big as Apple. I would suggest doing a $100 million offering and see what happens, and you know, kind of like Overstock did or something like that. But eventually, if this works, if my theory is right, and the kind of world becomes tokenized, and we're going to have you know, these issues, and you will have strong chains. Right now, yeah, there's not many strong chains, but it's not so simple to describe as just replacing DTCC with some, you know, crappy network of insecure exchanges. You know what I mean?
So let's go back to the first example that we had that was, other than Overstock, that was somebody wanting to sell securities and have them be securities on a blockchain. And that was Main Street Investments. Do you remember Main Street?
No.
That was the Jason Granger, Charlie Shrem offering.
Oh, okay, yeah. I remember you did a piece on that. You weren't very flattering of Granger.
Well, let me ask you. You know, when you're talking to folks in the cryptocurrency world, and you're making statements like you do on Twitter about crypto securities, do you think people are going to buy those securities based on the merit of the underlying investment, or are they going to buy it because it's security on a blockchain?
Well, like I said at first, you know, just like I said in that tweet, you know, I think at first a lot of them are going to buy them for stupid reasons. They're going to buy it because they believe in blockchain hype. I mean, you could have a security that doesn't even have anything to do with blockchain. And that's what you see with a lot of these ICOs. You see deals that failed to get venture funding. You know.
Yeah, and that's the thing, right?
VR or whatever. And then they try and throw a blockchain angle on it.
10 years people have been trying to raise funds and they can't.
Yeah, you're going to see the same insecurities. Make no mistake, you know, hopefully this tape will be around. I mean, make no mistake, there's going to be a boatload of scams. The SEC is going to be very busy. There's going to be thousands and thousands and thousands of these things issued in an attempt to claim that they are complying with securities laws. And there's going to be all kinds of exchanges that trade them. And here's a crazy thing. You know, decentralized exchanges are going to be a really interesting area for the SEC because, as you know, most of the rules relate to actual exchanges. If something is peer-to-peer, there's a lot less rules. So it will be very, I mean, if the SEC even wants to prevent it, it will be very difficult if they did try to prevent people from going and taking their phones and trading securities in cafes like local Bitcoins. So it's going to be a very interesting area. But yeah, I'm totally with you. I think it's superior technology that will offer a lot of advantages, and it's not just elimination of the trusted third party, but I think it's an easy way to get liquidity. The reason that these scams have raised so much money is because it is kind of frictionless. I mean, if I've done LP investments and it takes all this paperwork and triplicate, and there's always people chasing you for signatures. And I've done, you know, investments where I can just send a QR code to my, you know, to Kraken or Coinbase. So there is some frictionlessness, which reduction of friction that will cause it to move faster and better in some ways. And with that certainly comes bad things. When you have easy money and you have hype, there's going to be a whole mess of scam tokens that are also securities.
You don't need a blockchain to send something with a QR code.
Well, right? No, I'm talking about I'm talking
all you're talking about is just the security and assurance on the backside that asset actually is owned by that person, and that ownership has been transferred. And that's a trust issue,
Yeah.
right? You don't need a blockchain to sell securities. You don't need a blockchain to transfer securities from point A to point Z. You don't need that.
Yeah,
All
you don't
you're
need a
trying to
computer
solve is a
either.
trust component. That's right. But if you're trying to do it in a coffee shop on your phone and it's a novelty or whatever, it doesn't need to be a blockchain. So getting back to what are you trying to solve, it's that. Now,
but a blockchain, I mean, it would be cool. And even for the smaller offerings, the 504, I would love to see more 504 Reg D. I think that the reason is because it's harder for exchanges to do it. The other one that's interesting is
you know why it's hard for exchanges to do it?
Because it's
a security.
Well, of course.
They admit by doing a 504, it's a security. So there's no crypto company out there that wants to do a 504
of course.
because they're admitting they're a security and they can't get listed on the exchanges that are there.
Right.
And so Polymath tried to solve that by saying, hey, we're going to have our exchange. We welcome anybody that wants to do that. How many people are listed on Polymath today?
I don't know.
How many people are listed on T0 today?
Well, T0 is not up and running yet. I mean,
exactly, right? So we can talk about
if your question is
benefits.
If you're thinking there's not going to be issuers, that's crazy. There's going to be a lot of issuers. I mean, there's going to be a ton of issuers. It's the thing. There's going to be so many issuers. I'm going to be doing videos with you talking about how many scams there are. There's going to be thousands of issuers. I mean, everybody who is looking at doing an ICO, which is every joker and scammer in the world, is looking at this. And simultaneous to that, separate from that, a whole mess of serious securities offering people, or serious funds and serious investment products who've issued real securities and raised billions of dollars. They're also looking at it. So you're going to have this double. I mean, you're going to have a lot of serious issuers.
But why are they looking at it?
Well,
you have to ask yourself, why are they looking at it? Why are they looking at this technology?
It depends a lot on
it doesn't have anything to do with how good it is. What it is that it's a multi-billion-dollar liquidity market that people are pumping back and forth. Bitcoin went from 5,000 to 20,000. What is it today? 6,200? Have we bounced yet? The point is there's so much volatility and so much opportunity for 10x, 100x in a day that if you were running a fund, you'd be foolish not to look at it, just like they thought they were foolish to not include subprime in their portfolio.
Oh, yeah. Right? No, I agree. It disgusts me. I've put a lot of thought into this, and a lot of my I feel like taking a shower when I talk to my former Wall Street colleagues because they don't give a crap about this technology. I care about this. I've been in Bitcoin for a while. It's been good to me. I care about this stuff deeply. I care about it. That's why I work on it, and I believe I believe in it. And absolutely, these people are clowns, and a lot of them are going to get whipsawed. They're not even asking what blockchain they're going to put it on. They're just willy-nilly throwing it on ERC20 because everybody else is. They're gonna be in for a rude awakening. And absolutely, I agree. A lot of them are just out for the money. They see this word blockchain, they see the easy money flowing in, and there will be easy money. I mean, one of the things that I can share this. With T0, one thing I said just the other day, I said, we've got to watch it. If this takes off the way we think, we got to watch scammy or not even scammy offerings, but decent offerings getting overinflated because of surrounding scams. So in other words, suppose as an exchange, you had a really good offering, like the one I just mentioned with Apple. And then they said, okay, we're going to try this blockchain thing. We have this little division called, Apple Argentina. And because of the laws there, it makes sense for us to do it as a separate security. Great. We're going to put that on the as a blockchain, as a securities token. We have a risk if there's so much hype and crap out there. If that security is worth 100 million, what if every clown in the world piles on? And because of the way that the liquidity is, it shoots up and now it's trading at, 17 billion. Crazier things have happened in this space. So I was just saying that the other day.
The whole point of the Main Street investments is that it was just a garbage company in some northern state somewhere.
Right.
Nobody cared about, but the only reason anybody cared about it is because it was going to be issued on the Ethereum blockchain.
Sure.
Right?
Yeah.
So, you've got
you're going to have a lot of that for sure.
So here's what I want to know. What's T0 going to do? Or what should the other exchanges do to put in some sort of checks and balances and vetting of the offerings that go on their exchanges?
I think that'll be a field that unfolds because there's not a lot of offerings out there to choose from. I think, Coinbase has always been very conservative about adding new assets. They've now made it clear that they're going to add a lot of new assets. And I think it's because...
Didn't they just add Etsy Ethereum Classic, didn't they just add it?
Yes, they did. And I think, I mean, clearly, if you see the writing on the wall, this is probably why they got the securities license, because they're taking the smarter road. A lot of these exchanges, I mean, I knew the law from my job that you can't sell securities without a license. So right along, as soon as I saw these ICOs, I said, well, many of these may say they're not a security, or they may claim that they're a utility, but they're going to be considered a security anyway. And therefore, if you're trading them on an exchange, you're in violation of a whole different set of laws.
So how is Coinbase going to start enforcing, you know, all of the 144 requirements, all the restricted requirements on who can sell and who can't? How are they going to know?
There's
you as a control person that may have restricted shares, or not, you know, doing it in a peer-to-peer way to somebody else, and then they just go and sell it on the Coinbase exchange.
There's
How do you get those controls in?
There's hundreds of people working on that right now, and probably I guarantee you, Coinbase has a team of engineers and lawyers pouring over for the last 6 weeks.
Don't guarantee that.
I bet you they are, because everybody knows about these. All right. How about this way? I know of dozens of lawyers and engineers who are looking at exactly this issue. Maybe not hundreds, but I know of dozens, and I would advise anybody else who's looking at it to do it, because
full disclosure, I was one of the expert consultants on the class action lawsuit against Coinbase involving Big Vern liquidating assets through Coinbase and going away. So I've got a little insight into their internal controls.
I don't want to give you know, advice to anybody, but if I wasn't,
please don't. That was the whole point of this, is me telling you not to give people.
If I was an exchange looking to sell securities tokens, I would definitely have a team of lawyers and engineers looking at how to comply with the restrictions. Because
right?
Well, yeah.
How many people? Listen, you've heard people talk about the Howey test, right?
Of course.
It's at every convention. Oh, we're beating the Howey test. That was the whole point of the DAO. Was, oh, we finally solved the Howey test. And when you tell people, great, how did you account for the issue with Glenn Turner? And they're like, well, what's that? I'm like, great, awesome. You're obviously well advised, and you've done research into securities law. Good luck. Here's my number. Call me when you're in handcuffs. Right? I mean, it's just. This world doesn't start and stop with Howey. It doesn't start and stop with just one case. It doesn't start and stop with one regulation. I said it years ago. You can't forget about the states. You can't. The states are going to enforce their law.
The best one I've seen yet is a tweet, and I saw it repeated a bunch of times. So some clown at this ICO, I can't possibly call them a compliance officer, but somebody decided that this would be a good idea. So they tweeted, I forget the symbol, blah, 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 does not offer a dividend, therefore is not a security. And they're tweeting this as if this is some kind of disclaimer, as if, you know, a dividend is the only piece of that definition in the 33 Act, which has like 100 words in it. Yeah. And dividend is only one of them. and B, as if you can just wave things away. I told them it's the securities law equivalent of the people on the bad cop dramas, where they ask the undercover cop, "Are you a cop?" before they do the drug deal. You know, and there's people in the real world. I've seen it on like the show Cops, where people say that they think that because they saw it on TV that cops are somehow obligated to tell them, which, you know, is sort of hilarious, because if that was true, maybe, like, you know, I don't know, the organized crime might know that, and then there would be no more undercover. So that's sort of the securities law equivalent, you know, going out there and saying, you know, we don't offer a dividend, therefore we're not a security. I would probably be, pretty sure that just based on that tweet, A, they probably are a security, and B, they have no lawyer, which is a bad combination.
So we've been going for about an hour and 15 minutes now, which is way more time than I thought we would actually spend today. It's been a great conversation. Thank you very much. As has been my tradition in the past, I just want to state very clearly and openly, I'm not your lawyer. I'm not. I could be.
Me neither. I'm not even a lawyer at all.
You know, just to kind of summarize what started this whole conversation was Bruce posted a couple things in Twitter talking about the usefulness or the ability of non-accredited investors to be able to acquire tokenized securities at some point in time in the future and have that be available to them. I took exception to that based on my impression that his involvement with T0 and other functions, that may be looked at from a regulatory standpoint as some form of pre-pamping of the T0 network, and that he needs to be careful because really, at the end of the day, you do not have to have a blockchain or have a tokenized security in order for a non-accredited investor to purchase a security. And in fact, you don't have to have a cryptocurrency company actually offer a tokenized security in order for them to offer securities. They can do it on paper. And then the final point that I tried to make was I think that there's probably room for more traditional and better business modeling and business plans in the cryptocurrency world for legitimate businesses that want to do things that are far easier to do, like the 504 exemptions, to raise a modest amount of money and still be able to be flexible and do the things that they need to do. So those were the major points that I wanted to make. Did you want to do a brief summary?
I think those things are cool. I'd love to see things like 504 done also as tokens, because the one thing we disagree on is whether, yes, you're right, you don't need a blockchain to do this. It doesn't need to be a blockchain. I don't know if you're convinced about the advantages. I see a lot of advantages, not just at the big capital markets, but we didn't even get into the little things. I think that we could see a world where you have hot dog stands doing Jobs Act, tiny little offerings of $50,000 and raising it from their community, and the community has tokens, and they're never going to trade on something like a T0, I mean, unless the company, did really, really well. But I think that tokens are better than paper in certain ways, and the hot dog stand vendor doesn't have to maintain that ledger. He can rely on the security of something else. So I think that's one thing we disagree on.
On that note, I want to point out, now that you've said it, about 2 seconds ago, somebody just launched on Kraken hot dog coin.
Seriously?
And they're pamping it.
Well, this was unrelated to that, but
I'm kidding. But that's how fast the cryptocurrency world.
Well, it could. I think that it's
because
exciting.
It takes 2 seconds to build an ERC20 token and put it on exchange.
But that's good though, because I'm not afraid of when you have liquidity and it's easy for people to raise money. Yeah, that makes it easy for scams to raise money, but it also makes it's just like Bitcoin. The argument with Bitcoin is like, well, you don't really need it. You don't really need it. You can have a government, you can trust a trusted third party to tell you what your money is, and you don't really need to be able to send it to around the world. And you don't really need to ever send it to Iran because that's illegal, but you don't need to be able to send it to London in 60 minutes. It's, transfers through interbank wire systems is perfectly fine, but it's an advantage. And some people say it's an advantage, and this may not be as big of an advantage or whatever, but you don't need it. You could trust the parties, but I think it'll be better, and I'm willing to bet on it that it will be better. Which is why I'm involved in so many projects. And this it really isn't about any T0 or any other particular thing. It's where I've only been on the board a little while. I've been saying this stuff for years. I predict that this is where it's going, and I'm talking about broad, big picture things, and I do care a lot about the regulations and a lot of the same things that you care about. So I think it's going to be an exciting world.
Shameless self-promotion time. Tell everybody what you're doing.
So well, like I said, I've never raised a penny in this space or asked anybody for a dime. I'm not selling anything. I don't have any product really. I just say what's on my mind. I invest my own money and my own beliefs, and I host a couple events. I'm on Twitter under Bruce Fenton, and what I would like to do though is use, as this works, is issue securities, and also eventually decentralize the whole job I had of being a financial advisor, because in the new world, you're not going to be able to raise assets and do it. I think there's ways that you could sort of have advisors giving advice without having control of their client assets, having people hold their own keys or voluntarily trust somebody like Coinbase to hold their own keys, which, by the way, I think a lot of people will do. It's a pain to hold your own.
Wait. Can't you do that already? Like right now with bespoke services? Couldn't you be a bespoke advisor and just charge for customized?
Sure. Yeah, I've done that. But the thing is, most advisory businesses are based on assets under management. That's pretty much how everybody's measured.
So bespoke advice, that's what Reggie Middleton's doing, right?
Yeah, there's a lot. It works better on certain types of, there's a lot to it. There's a lot of different models. You can go fee-based or commission-based, or you can charge by the hour, or you can do like a wealth front kind of thing. There's a lot of different ways to charge for advice, but many of them rely on the advisor controlling the assets, either as through limited power of attorney, or actually putting them in assets under management if they're a broker. And coming into this world, and now I am fortunate enough to have been in this space early, I have a lot of these friends who've done very well. And I was thinking, I said, well, what would it be like if I was, myself of 15 years ago, I would have killed to be in these rooms with all these billionaires and wealthy crypto people. I would have wanted to be their financial advisor. I'd be pitching them on, hey, let me be your advisor. And I'm not interested in that business anymore for myself, but I was thinking, well, how would I serve these people? Because the old model that I had when I worked at Morgan Stanley of, hey, Mrs. Crypto genius who made a bunch of money in crypto, I think you should diversify and put a little bit in equities. They're not going to sell their crypto and wire it into a Charles Schwab account and have me as an RIA. Some might. You could build a little business like that, but I don't think that's going to be the future. I think crypto people, which is hopefully an increasing part of the world, will want to use crypto security. So they're going to want mutual fund type assets that are in crypto. They don't have to mess with going on to the old school rails, and they'll be able to have it. And I'm just saying Kraken as an example. I have absolutely no idea if Kraken intends to be registered, but if they did, it would be cool to have it right in your Kraken account.
One last thought. I thought about bringing this up, and I decided against it, but it's come up a couple times now, and so I want to hear your thoughts on this. One of the things that I've seen, I don't know, in the last year or so, is a lack of new liquidity coming into the cryptocurrency market. I'm not seeing new money coming in. What I'm seeing is the crypto community basically eating itself, right? So as you have Bitcoin and you have Bitcoin Cash, right? So I didn't see new money come into Bitcoin. I didn't see new money go into Bitcoin Cash. I just saw Bitcoin go down and Bitcoin Cash go up a little bit, and the combined value of the market is the equivalent to the same as if it was just Bitcoin. The equivalent of EOS, right? We had 300 million drop out of Bitcoin the other day and go into EOS. It's not like the total value of all the cryptocurrencies are going up because we're not seeing new liquidity come in. We're just different coins or different tokens come out and they just eat away from the others. What's it going to take to get new money into the cryptocurrency space, so that we're not sitting here in competition, company versus company, scrambling for the same day trader bots, right? How do we get new insurgents of money in? And is it through your securities offerings? Is it by bringing in these the institutional investors that are going to be interested in it because it's a security on the blockchain? But how does that get Bitcoin more?
The kind of securities that I would offer would hopefully be so large and flexible that there wouldn't really be an ability to kind of overhype it because it would be blockchain, because it would be, for example, I would like to issue a security that invests in publicly traded companies, and you can have a token that you can trade, and that's definitely a security. And that.
So wait, are you offering securities right now, Bruce?
No, but I made a security on Twitter a while ago under exemption 4A2, which is like you don't sell it at all. So hopefully, hopefully, as my not lawyer, you would agree that if I didn't sell it at all and didn't ask anybody for any money, that this piece of paper, see, it was here for Bruce's hot dog stand, issued in the form of this security, but. I think I was just illustrating the different types of exemptions out there, and 4A2 is probably the one that nobody ever uses because you can't do anything with it. but anyway, that was for illustration purposes. But yeah, I think that there's definitely going to be a lot of scams out there, but there will be some securities that are really good terms from good companies, and I think you're already seeing the beginnings of that. I don't want to get into specific companies for obvious reasons, but I think that you'll see the beginnings of that. And you have high quality firms like Morgan Creek Capital. Morgan Creek's been around for a long time. I actually knew Mark Yusko in my old world. He was a great speaker talking about the economy and stuff. I think they manage 5.5 billion under an endowment model, and they have 15 funds. So they're like it's a whole different league when a group of that caliber issues a security, somebody who's already issued 20 or 30 securities, versus some, kids who read some papers and think that they have to be a security because it'll help them raise money. I mean, it's a big difference. So I think as you have high quality offerings, and that it will help the industry scale, and then you'll have a bunch of.
What happened to having high quality businesses?
Yeah. Well, I mean,
where did that go?
Right? Because we don't have that. Yeah. Well, no, that would be. No, that's what I'm talking about. A high quality. I mean, I'm a fund manager, so I would be a fund that invests in high quality businesses. But yeah, business could do it directly too. You could have an overstock. I mean, overstock is already issued a security. There's a lot of reasons about why it's limited and everything like that. It was more of a test. It was like 2 years ago, I think, very very early in the market. They didn't even really have.
So what cryptocurrency based company or blockchain based company have you seen in the last year? And this honest question, that released a coin in an ICO because they were looking to expand capital to help them continue to grow. Because they already had an established product, they already had an established business model.
None that I know of. Yeah, none that I know.
Right now, there's several that already had some form of beta software that existed, right? Yeah. But how many of them had beta software, then went out, then went to public release, and then at the end of that said, you know what? In order for us to expand this and for us to really do like the next level, next generation implementation of our features, we need to hire 20 developers. And the only way we can see to do that isn't going to a venture capitalist and getting a short-term note. It's to ICO and cash in and get 200 million.
Right. Yeah. And to make it even worse, not only are they getting these huge seed rounds, but they're not even seed rounds, because at least with seed rounds, you have terms. A venture capitalist, and they have, venture capitalists have done huge seed rounds, but they have very strict terms done by really strict negotiators, which say, yeah, we get this, but we own something that is of value. So yeah, I completely agree. But I think you'll see it. I think you'll see it as you have more quality issuers, and that could be an investment company, or it matters being a quality security, not just a quality company, because company equity is one form of security, obviously, but they, you know, any quality security, it could be real estate portfolio or something else. But if it's a truly quality security from a quality issuer, either a qualified asset manager or somebody who who's done it before, or a real company with real revenue. Yeah, that's what that's what I'm betting on, hoping that there'll be a smaller market where maybe some of these there's going to be so many startups and scammy new offering securities tokens. Maybe some of those will work, and then there's something in between too, where hopefully some of these big companies, maybe Bitmain or Coinbase or Binance or something like that, rather than trying to go public on NASDAQ, maybe they'll sort of help their own community and have like a real, like for example, Coinbase. If Coinbase is a Bitcoin blockchain company, but if they had a real securities offering or in the form of a token that had real terms that said, okay, if you hold this token, you are entitled to X, and the X is something significant, that's just as high quality as if they went and did it, and they're big enough now to go on a real, a real old school exchange.
So switching topics, are you still with Bitcoin Foundation?
Yes. Yeah.
Okay. You were the head of it, right? At one point.
I was, and now I'm on the board.
And who's the head today?
His name is Luke Claassen. He's from South Africa.
Luke Claassen, right.
He's a venture capital investor, Bitcoiner.
So, as someone who studied securities, as you have, and you're aware of the management and control component, and this is something that we were challenging ourselves with in the internship here in Panama with the Radix interns, is what's the likelihood that even though originally under the analysis, and what I argued for, and what we've been talking about for 4 years, and the analysis I did under the Howey test of Bitcoin as Bitcoin back in 2014 in the Seibert case, was that obviously it's not a security, it's too decentralized, there's no management and control. Do you think there's an argument today, honestly, an argument today that potentially the continuum of management and control has been crossed with the amount of influence and action that the Bitcoin Foundation takes with the Bitcoin protocol?
Well, definitely not now, because we don't really have barely any influence anymore. I don't think any of the core developers even listen to the foundation. We used to pay their salaries. So there was an argument that because we paid their salaries, they were somehow beholden to us, which was sort of funny, because anybody who knows these folks knows that, it'd just be, I wasn't the executive director at the time. Oh no, I guess was I? I think I was, just as I was coming on was when they were going, the main 3 developers we paid went over to MIT. But yeah, there's not really any, certainly not the foundation is maybe, barely powerful at all. It doesn't really have much influence, certainly not over code. And what it comes down to is who runs what. The miners are really the ones who decide what they run. And
Yeah,
when you
yeah,
have
but who presents the code to the miners to vote on to run, right? Who coordinates those efforts?
it's not the foundation, but it's done through an open source process on GitHub. There's a lead maintainer, and there are certainly people who have more influence in that process. Vladimir, as lead maintainer, can decide what's sort of put into the code and pushed out there. But I don't think, I think you could, I would fight that to the death, and I'll go to court, and we can have some fun and go to the Supreme Court, and I'll be like Larry Flint, because I will, that's not something I would settle on. I will fight that to the ends of the earth. And that's something I would be an activist for, because at the end of the day, what's really interesting, this will be interesting for your students, is what Bitcoin is, and the true open source, decentralized, fair launched forks of Bitcoin. What it is, it's basically you're taking an idea and you're putting that idea down in a paper or blog post or whatever, and then you're expressing that idea in code. And it's usually different people that do it, especially these days. So you're basically, and I've done this, I've said, here's an idea, and I released Spacesuit X as an open source project. I just give away the idea. Now, if somebody took that and made code about it, which is just an algorithm that helps you pick stuff. But anyway, suppose somebody made a platform off of an idea, or issued code, and then you just publish that code on GitHub. Everything else that happens with Bitcoin is decentralized and done by the market. And you could say that that person has control of that code that they should. Suppose there was only one maintainer. Suppose it was just Vladimir. Suppose he was Satoshi and he invented it and he was the only controller. Then you'd have a more solid argument. Or even if it was a company, if it was ABC Vladimir Inc. and he said, yes, I wrote the code, I invented it, I do all the commits, all the changes, I'm a one-man consensus crew. What I say is what works. That wouldn't be a good model, obviously, and he'd never do that. But hypothetically, you could have a more solid argument for control. Even in that case, I would say, you know what? He has a right to publish poems. He has a right to publish code. Everything else that happens in the outside world is not on his responsibility. If I make a poem and somebody takes that poem and they go and do something else with it, or ascribe value with it, or start trading in it, that's a secondary kind of concern. So the initial way that something's launched in a true fair launch open source, I think it's a huge difference from ICOs or utility tokens, or even securities tokens. It's a huge difference when it's true, fair, and free open source. All you're doing is publishing an idea. You're publishing code, and everything else happens where people run that code, and you can have this huge network that's built from it.
So challenge accepted. Thank you for offering to fight to the death on that issue. We'll be happy to invite you here to Panama, run a moot court scenario with our legal interns here.
All right.
You will be defending Bitcoin, and I will prosecute
that
Bitcoin is in fact a security. When would you like to do it?
Let's do it. Let me. I gotta get a lawyer to represent me.
Sure, bring anyone you want.
I don't want to go into court representing myself. Okay, so
I will take any takers. You know what? Call up Marco.
I think that's who Marco was my lawyer until he went and did something else. But Marco was my lawyer.
No. I would love to have all of you guys down here.
Yes.
Either that or we'll come to you. It doesn't matter. The interns leave in the middle of July. Let's do it within the next month.
Maybe you can come up here.
We will fight the case.
You can come up to New Hampshire. We've got a bunch of, I bet you there's all kinds of crazy libertarian lawyers up here. You'd love these guys. I had a friend of mine who represented himself in.
My budget isn't big enough.
Maybe we can get you up here. All right, we'll figure out the details
up there to be able to do it, but I can't afford to bring you and Marco down here.
Okay,
but I'd love to do it as part of this internship for law and crypto down here, and make the argument for and against Bitcoin today has crossed over as a security.
Yeah, that would be fun. And it's funny, there's an open source project that I'm working on who's running through this issue where their exchanges want to list them, and they're saying things like, okay, we need a letter from your lawyer and your CEO.
Oh yeah, yep.
But
I get those phone calls.
But a true open source project doesn't have those lawyers. They don't have a real open source project doesn't have a CEO or a lawyer who can write. Bitcoin didn't. There was no general counsel of Bitcoin. There was the foundation had one, but they didn't write letters like that. So yeah, let me see what we can do on it. And
love to do it. If somehow you can miracle it to happen in the next couple of days, David Silver is going to be here Tuesday night, and Junseth is going to be here Tuesday night in Panama. We're hosting them here. If we can make that happen that fast, that'd be awesome. We're doing a panel at 7 p.m. here in Panama. It's an open meetup for anybody that's going to be here. If we do it later, great. I'd love to have you and Marco here, and we'll do the Battle of Bitcoin.
Awesome.
Keep in touch. Let me know when that is, and we'll make sure for those that are watching, we'll absolutely broadcast that live on the air. And also open invitation. Anybody from the SEC that wants to come down here and be my co-counsel to actually learn how to argue this stuff, I'm happy to have you on. So anything else we can do?
That's it. Sounds good.
Man, I am looking forward to this.
All right. Good talking
Battle
to
of the Bitcoin. Good talking to you. Thanks for the time, and have a great day.
You too. Thanks.
Thanks for tuning in, everybody. I'm Jason. I'm not your lawyer. Full disclosure, I'm not anybody's lawyer right now. I'm the executive director of the Radix Foundation, which is looking to increase legal education for attorneys on how to cross over cryptocurrency technology into the law and how to interwove those various markets. We're in week 2 right now of our internship out of 9 here in Panama. If you're interested in being a part of the Radix internship, or you want some of this content that we're doing here brought to you, reach out to me. We'll see what we can do. As for that, thanks everybody. Have a great day.